I know. Well, Lori and I were saying, because we were thinking about, should we do some sort of fund around this, or like at least an AngelList syndicate? And I just not seeing enough, at least from our deal flow channels, that make me want to fund VR. So it's something we're talking about with each other. So that'd be good to get your opinion on that too.
Yeah.
And
Yeah, I'd love to get a take on that.
Yeah. Oh, I have a lot of takes, especially obviously trying to raise from, more institutional LPs for that kind of things.
Arian, welcome to the show. Lori, say hi. Introduce yourself.
Hey, what's up? Nice to meet you, man.
This is exciting. So this is our first video episode where we're going to be working with who I think is probably one of the leading funds within the space. He's one of the most active. He's working on raising a fund right now and has some of the best LPs like Andrew Chen who have backed his early fund. So Arian, do you want to give a quick intro to yourself, what you're doing in the venture space, and also kind of talk about how you got here?
Yeah, I mean, I would never know where to start these sorts of things, to be honest, in terms of where it started, right? I've always pegged it to, go back 10 years when I started the endeavor of being a failed founder, right? And kind of figuring out that, maybe I like the investment side better than the operator side. But kind of fasting forward from that, my academic background is in machine learning and natural language specifically. So got around through Meta that way, since kind of at the time that I was coming out of college, misinfo was a big topic. And so a lot of my research in university was actually on these kinds of domains, like not language problems within the social media domain. So was a natural fit, got there. And then the first day, I think we were in the office. This was back when everything was still IRL, obviously. They made us try an Oculus Rift, I think it was at the time. And I never tried a VR headset. It was the first time. And so I think immediately I was like, I get this, right? It's still very rough and, but I can see where this is going. I had like a similar sort of episode like 8-9 years ago now when I first started to get into machine learning, where like, I think this is going to change a lot of stuff. I should get into it. I had a kind of similar reaction to trying the headset at the Oculus office at the time. And so pretty quickly after that, switched over to the RL side at Meta and worked on a lot of like, I guess you can call them spatial AI projects, but mostly on the AR program actually, but there was some VR stuff related to it. And then in conjunction to that, again, kind of going back to the failed startup experience, I always kind of knew that, I want to play in that space. I'm not really like a corporate guy, but I don't like being an operator. I should invest. So I started angel investing and, to make a long story short, I think it just kind of snowballed from there, with the space being as small as it is, I think. And I enjoyed it. I think founders like me. I think a lot of the VCs like me. And, I think at one point it sort of snowballed to a point where I was like, it's a fork in the road. And either I gotta pull back from my personal sanity because I can't support full-time Meta and full-time investing anymore, basically to the extent that I was doing it. Or I'd go 2 feet in. And so, decided to go 2 feet in because again, I just enjoyed it. I naturally tended to that. It felt more missionary to me anyway. Put feelers out to some of the VCs and stuff that I knew. And I think I was deciding at the time between should I join a fund or kind of should I try to do my own thing. And I mean, long story short, I just felt like I think I got the signal that I think I should do my own thing. Like I definitely got offers to join certain funds along the way, but I just felt like me really getting to do what I want to do and kind of keep continuing what I've been doing as an angel. I just got to do it alone. And I think there's more upside to that. And so, decided to do that. Like you said, had some like great partners coming pretty early, which I felt that, probably like a bit of a validator that I should try this. And so, yeah, so that's basically what we've been doing. So I've been doing full-time on it for what, like, almost 2 months now, I would say, since I quit Meta to really focus.
And what's the biggest difference between doing that from like an angel perspective and then going into more of like a full-time fund perspective?
You're running a business, I think, for the lack of a better term, to make it sound really stupid, but like you're running a business all of a sudden, right? Because if you're an angel, you're just taking like your excess income and screw it, I'll sign a safe wire, you're kind of done with it. Which, I mean, to some extent, you could say the actual investment dynamics of doing pre-seed VC isn't like super different from angel investing, but all of a sudden you have LPs that you have to manage, you have LPs you have to bring in, right? You have to write all these updates. You're a company, you need to kind of also focus a little bit on your outward brand and that sort of stuff, because you need to obviously convince companies all of a sudden to not just take 10K checks from you, which can be very easy to kind of fit into any kind of round, right? If they like you, if you're writing bigger checks, that gets harder, right? So you have to think a little bit about, how do you keep your your brand up for founders to want to work with you. And, I think at pre-seed that at least at this space is still not that hard, but they're like things that you have to think about that like you're over the longer term, there's a business that you're growing now and not just, angel investing. Keep in mind, you're investing other people's money, right? So some of the things I might have YOLO'd into as an angel, I maybe have to pause on as a VC because I'm like, do I feel good about throwing other people's money into this deal? Like if it's my own money, who cares, right? Like if I want to do it, I want to do it. But, you got to be a little bit more, I don't want to say pump the brakes, but like, you got to be a little bit more diligent with where you put money and like, at what stage you're willing to back founders, if that makes sense. Like, I don't want to say like, oh, there's no such thing I think is too early, but like you can't YOLO as much, right? Like, and I think that's probably also for the better, but it's just different, it's like ultimately also like you're paying yourself off of this from fees and stuff. It's a very different world than having a nice Facebook salary and whatever excess income that you have because they pay you way too much anyway, it just goes to investments and you don't have that anymore, right? So it's a little bit more, all of your eggs are kind of in one basket. So it's kind of like just it's definitely been a bit of like a dynamic change in terms of like how you look at like running your own life, if you will. So
are you writing investment memos now as you weren't before?
So I think what I'm doing more, I mean, obviously there's more of a rubric that you have to work through because you have to be able to like justify every investment to an LP if they ask you about it, right? So like naturally you need to have like a pretty sound reasoning as to why you're doing it. Like I don't write full-fledged memos. Like I have done it before, obviously, because I used to run syndicates when I was doing a lot of the angel stuff. So for that, obviously, I have to write memos, and so I'm kind of familiar with that. And I've even seen internal VC memos before, even before starting all this. And so to some extent, I definitely do it because I do need to keep track of like why I'm investing versus why I'm not investing in certain stuff. But like I wouldn't say it's like they take the same form as they would when I'm like running a syndicate, right? There's just the dynamics very different, right? What the purpose of it is very different. But you obviously got to keep track of stuff because the big thing is like not just we're investing in individual deals or whatever, but more like you're sending the quarterly updates, right? It's like you need to make sure that's pretty like rigorous. And so I've even started like introducing way more like data tracking and all these sorts of things that I was doing as an angel, right? Because you're looking at all sorts of indicators from what is the average entry price? What is the average round size, right? How does that reconcile with the thesis that we're pitching? A lot of things like that, right? Your MOIC, anything in that direction, right? Anything in between, which you didn't really have to care about as much as an angel, right? Like I think it's still good as an angel. I did get into a practice doing as an angel a little bit, right? In terms of keeping track of some of these things, which led me to the thesis I ended up investing on anyway. But like you got to be a little bit more airtight with I think a lot of these things now because you want to make sure that you're reporting to LPs is robust because in the end of the day, like your job for LPs is to return the money, right? And so the only way you can do that properly is you're actually, you're keeping track of everything. You're not kind of just willy-nillying it. And, your strategy kind of from a bottoms-up perspective also makes sense to return the money and you're executing on that. So I think you got to keep track of that. That being said, though, I do always say when I talk about these things, like, yes, on one hand, my job is obviously to make LPs money, but I do very much function in philosophy that I think my client is actually the founder. Because I think that's the way kind of the best things happen, right? Like you're backing the right extraordinary people early and you want to get kind of into their company and you want to really help them build their company out. So I see a lot more of my responsibility as helping extraordinary people do things I care about rather than just, exclusively focusing on money grabs, right? I think there's kind of like a balance to weigh there in terms of, I'm doing good to the founder and like ultimately that's where my business is coming from because also how you're going to get into the best deals, ultimately founders like you is how you're going to get into the best deals. If your reputation's trash on the founder side, good luck, right? And I say that because I also know funds that have that problem, right? Where they've just basically been a-holes to all the founders they deal with. And I don't know how they're investing in anything right now because like nobody wants to work with them, right? And so you don't want to be that guy, right? Whereas like on the flip side, I think some of the funds that I've seen that have done extraordinarily well at this stage, like particularly this pre-seed stage, have a very strong reputation of being extremely founder friendly, right? And very, very good supports. And like any founder that works with them raves about them, right? And so they also tend to return very well. So I think
within the VR investor space, how do you think about the landscape there and who are the founder friendly investors in your eyes?
It's small for sure. I mean, I venture to say that I probably know I mean, I don't want to say everybody, but like the vast majority of people that are investing pre-seed, maybe even seed. I'm learning more of the folks now that are kind of willing to bet on kind of Series A plus, which tends to be a lot of corporates actually. I think a pre-seed, like the ones I always tell founders that, like other than of course myself, right, that I'd want to work with, or like Boost VC, Anorak Ventures, Founders Inc. is another really good one that I think they're building out a little bit more of a presence. They're also very supportive to founders. They're probably like off the top of my head, like my top three, I would say, in terms of like, and let me put it this way: if I have a deal that I like and I'm investing in, and I, they still have a round to fill out, it's pretty early in the round, I would say like they're probably the first three funds that I would go to be like, do this with me, kind of thing. Because they're great. I mean, and they're also, I think those are three funds that have had a pretty long commitment to investing in VR regardless of the macro climate, right? And so I think that shows in how they also deal with founders.
Yeah, Boost, Anorak, Founders Inc. I agree.
Yeah, those are probably off the top of my head my top three. I know somebody, if they see this, are going to yell at me for like, why did you name me? There are a few good ones, but like off the top of my head, I'll say those are kind of the top three, not to saturate too much. Like other ones that I like, FOV, like in Europe is a good one, right? But they're European based, so they're really for European founders.
Yeah.
There are a few cases like that. Stride also, if you're looking at the European side, I like them a lot, but they kind of have a similar thing where the founders need to have a tie to Europe. So if you're kind of like an American based founder, they're probably not really, it's not going to work. That sort of thing, right? But it's small. I mean, I would say overall it's a small space in terms of people that actually actively write checks. Now, there are a few funds, of course, that I know that are getting more open to it and that I think, want to do more deals, but I don't think they have at least a proven track record yet where you can say definitively that, they're really planted as a quote unquote VR investor, right? Or if I'm a VR company, this is explicitly somebody I would go after. But, at least there's some signal there, because again, there are actually a lot of people that reach out to me on the premise, like, when I went public with the fund for the first time. I was actually surprised at how many people reached out to me from a lot of, I would call them more generalist tech funds that, really went on this kind of direction of like, we're really actively looking at it. We're thinking about it, particularly with Apple, right, coming in, so we want to build more of an understanding about how to invest in it, what's investable, what does the market look like, which, it doesn't mean anything until they actually write checks, right? But I think the fact that there are people inbounding to me, asking me these questions is at least a sign that it's something people are willing to take, or like they're exploring and taking it seriously, which I would say is an overall good sign. And then I think that creates a cascading effect, right? Because I think what you see a lot is kind of the pattern of things is you have founders will start experimenting with stuff first. The VCs will follow interesting things that founders do. And then the moving laggard on all of that is the LPs, right? Usually, to say, this is something that we want to invest in. And so I think somewhere where we are with VR right now is probably somewhere still in the middle of that, like founders starting to get interested in it, and VCs starting to sort of like sniff around on it. And so let's see how that plays out. I don't think it will happen particularly quickly, especially given like everything that's being written about Apple's timeline, and a lot of this is obviously kind of something that's been instigated by Apple's announcement. But I'd rather have these indicators than not, right? Like I think my general impression is, I've had a few people tell me this now, that I was going around a year and a half ago, like at LA Tech Week. This was a guy I met at LA Tech Week last year, so in 2022, who had told me, like, I caught up with him, I think a week or two ago, and he was like, yeah, when you were talking about this VR stuff like a year ago, I thought you were nuts, but now I'm sort of starting to like get it. I'm starting to actually see how this could like go somewhere and whatever. And I'm hearing more and more people say that, which is like good, but again, it doesn't really mean anything until money talks, right? And so that's kind of why I have some healthy cynicism. But granted, I think there's more reason probably than ever for people to be excited or really look at it seriously now. I think not just Apple, but I think also just the natural relationship that AI has with VR. I think kind of makes people more imaginative about what mediums like that could actually do. And so they're kind of like multiple factors, I think, that play into why, the remote work stuff, right? We're spending more time at home, right? VR is obviously a good medium for that. Apple basically pitched that, right? So there are like a few macro trends, I think, that give some tailwind to VR that's beyond just Apple.
So just on that point where you kind of talk about your own value add and the potential of that being similar to guys like Boost, who are obviously much bigger firms than just yourself.
Yeah.
How do you see like your value add being different to them or the same as them? So like if there were founders kind of hearing this, like what would get them excited about having you on board?
Well, I mean, to be fair, I will say that I have a very, very close relationship with Boost as a fund, right? I mean, a couple of them are LPs in my fund, right? We work very closely together. So I would say, like, philosophically, we're actually quite similar. I think that's one of the reasons that we get on quite well, is that we look at how to make investments and how to support founders in a very similar manner. I think there are a couple of operative differences, and even Stage is the same. Like, we're both kind of happy to be like first check into somebody if we really like it, right? And that's not really stopping us. I think the difference is, the charter is just different. Ultimately, like, different funds are gonna focus on different things. Boost is they're much more generalist deep tech fund, right? So
Right.
VR is one thing that they do, but they're also, of course, interested in Web3 and kind of hard tech and space tech, particularly, that sort of thing, right? And so I call them deep tech generalists for the most part, that just are very committed to VR. My typical value add, I would say, to founders is that I'm the only institutional investor at this stage, at this point at least, that actually built this stuff,
Right.
and worked on it, and I'm technically a nerd myself, right? And so one of the issues that I've seen, and somewhere where I found kind of my favorite pocket to work in, is you talk to a lot of these pre-seed VR, and not just VR, by the way, this also applies to like AI, which of course I invest in a lot as well on Intersect, where they have a good idea that's very technical, but they have no clue how to sell it, right? And they don't really have a lot of networks and that sort of stuff. So it's kind of a bit of like, and I'm sure, as you guys know, right, like most of pre-seed pitching, for all intents and purposes, is narrative, right? Because you don't really have a lot of like substantial data to go off at that point, right? So you kind of have to make somebody believe that, hey, they're doing something interesting I should care about, and they're a good team to do it. A lot of them suck at doing that, right? Because they just don't understand how to position these things. And so where I've typically found a lot of success for myself, which I both enjoy, and I think it's something that's also I've had a bit of a reputation amongst founders now with, is I'll like help you early and reconcile that gap between your technical product and the investor side. And so, like, I'm going to help you bring in a lot of extra capital. I'm going to help you craft the narrative well and kind of raise more money. And so typically my moat has actually become of like, I'll help your early thing raise more money, basically. That's something I think I've done quite a few times as an angel, which is also why that was one of the indicators actually for me. Like, I think I should probably go into VC full time, is because I'm basically doing VC stuff, but I'm not really a VC. But I think that's the main thing, is just, you're working with somebody. Like, founders tell me this, I can't judge this personally, that yeah, we like working with somebody that both gets the markets and also is like very technical and kind of been on the operator side of this particular space. Which also, by the way, on the flip side, one of the things that I always kind of say is, like, I'm pretty well connected on the VC business side as well. And that's also one of the reasons, like, I got a lot of traction there as an angel, right? They're like, holy crap, we want to talk to somebody, us as VCs, we want to talk to somebody that both invests, but also, is boots on the ground with this stuff, right? And so that kind of was a big catalyst from the beginning on both sides, actually.
Yeah, so on that, like you mentioned, that the kind of founders are not so good, maybe always communicating that vision at pre-seed. And obviously, because there's not always the traction, sometimes it's just an idea. Like, what kind of advice would you because we see a lot of pre-seed VR kind of people come through, like, what kind of advice would you give them when they don't have that data to go on? What kind of narratives, what kind of vision are you looking for?
Yeah, I think vision is like, there are tiers to it, right? Because I think the one problem that you have to keep in mind, I have this conversation a lot with founders, where when I often talk to founders that haven't taken money, venture money yet, right? So for all intents and purposes, they're still at the bootstrap stage. And I think they're starting to go the direction of, should we raise VC money or not? Or it's like, basically, is that a path we should go down or not? And the thing I always tell them is, like, if you go down the VC path, you're effectively making a company building decision, right? In other words, it's like you're committing to the idea of having to build a company that fits a certain profile, which in very rudimentary terms means there could be a 100x return for a pre-seed investor for whatever you're doing, right? Like, otherwise the model doesn't, like, founders have to understand that for like particularly pre-seed investors, getting like a 5x return on what you're doing doesn't make any sense, right?
Right. And some founders don't always get that idea of, like, hey,
so
when you're going to pitch
right?
it, you're pitching $1 billion idea.
Right. And so the thing that I think I always say is, like, On the flip side to that, right? So if you're saying I'm going to the VC path for all intents and purposes, let's say I'm doing like a studio or something, right? I'm doing VR content, right? You kind of have to be committed to the idea of I want to build at least a studio that could sell 500 million plus at some point, right? Be acquired by Meta or whatever, right? Like otherwise for venture money doesn't make any sense. On the flip side to that, if you haven't taken money yet, there's nothing wrong with saying I might just make a game, bootstrap it, maybe make a few $1 million off of it and call it a day, right? And that's great for you, right? For the founder, like fantastic, right? Well done. But it's not interesting for the venture model, right? And so I think it starts there, right? Like where, when you're talking to VCs, you have to kind of lay out like, how is this actually going to be big enough to grow? And there are other things that then get more nuanced within that, right? So let's say you're raising a pre-seed now. You basically are also committing to the idea that you're probably going to have to raise follow-on capital again after that in 18, 24 months, some sort of time that you're going to either raise a seed or Series A or whatever, right? You're going to have some more financing. What are you doing in the next 18 months that actually positions you there, right? Like to actually be able to do that? Because the concern I have with a lot of companies that I see is, yeah, it is interesting. And in a very abstract sense, I could see the value of this over some indefinite time period. But in a very like business practical sense, I'm like, I don't see how they're going to get market penetration with this at all with where the VR markets are right now, for example, right? Or these sorts of things. And so these are common pitfalls that I see where there's almost like too much kind of, I would call it like unhinged creativity, if you want to call it that, that makes it sound negative, but I mean it more like, because there are a lot of very highly creative people in the space. But they don't necessarily always manufacture businesses that make any sense, right? Be it either that the ceiling's not high enough or they're not thinking about it in a way that it's actually like market viable. And so those are the things that I would focus on, right? Is like, what can you build in VR if you want to go to the venture path, right? What can you build in VR today, or what vision can you lay out that actually also makes it viable with where we are and kind of some expected growth in the market? And, there are a lot of decks that I see that I think fall flat there. Like they have a bit of like almost like a VR anarchist view of the world, which is just not obviously like the real world, right? And so that reconciliation, I think, is probably the biggest thing I would encourage a lot of like founders starting out to look at is like, can this work in today's market? Do these kind of things actually gain traction, right? Et cetera, et cetera. Like those are the things I really try to debug early.
Look, this is a selfless plug, but Lori and I are starting a program where people can submit decks and then we review them publicly. And what you just said is literally the number one lesson I think that you see within the founder space. They get I did the same thing, get very wrapped up in your head about VR first and forget how this is a venture business and it doesn't work when you're going to pitch VCs.
I say this actually, to be honest, I'm saying this more now to AI founders than I am to, or quote unquote, AI enabled founders, let's put it that way, more than I am VR founders to this point where like the whole point of a business is to solve a problem, really, right? And so if you're doing like technology for the sake of technology, I think that can be really, really difficult, right? And so I think one of the things that you want to get about clear even very early is just like what problem exists that you want to solve. And I think this is particularly leaving it that abstract is okay, because I think anybody that's invested in pre-seeds long enough knows that like a lot of companies pivot in some shape or form, or like even pivot tremendously, right? So it's like you don't really need to be married to the product, but I think you should probably be married to like a solution that you feel particularly passionate about. Like one example that I have of that is this company Scenario, which I invested in pre-seed probably like a year and a half ago now. And they're all over Twitter.
Generative AI, right?
But yeah, so they actually started out as, so I think their core mission was like effectively democratizing asset creation, right? To some extent for like games and all this sort of stuff. That was kind of like the high level mission at the time. So their initial rendition of the product was to do this in a kind of AR way, right? So you'd like 3D scan stuff, and you can kind of, then you get the like, you get like a 3D model, like let's say your phone, right? And you can play with it, you can do whatever, and then you can export it. And so that didn't work. And so when the company was pretty close to basically shutting down, they decided to just pivot into doing that with generative tools instead. And they've been crushing it since then. I mean, so they've been on like a rocket ship for the last, better part of a year now. And ultimately the thing I always say with them is that they never really changed the actual thing that they wanted to do. They just changed the means of how they got there, and they eventually found the one that seems to have really solves the client problem in a meaningful way, right? And so that's what I always say to founders is like, first and foremost, you got to be clear about that, right? Rather than just the tooling. It is true that, like there's certain things that VR could be used for that you can't do anything else, right? And that's fine. But I think, Don, exactly to your point, is like, don't think about it like I have to build a VR company. What do I do now? But more like, okay, this is what I'm going to do and how do I solve it? And if VR is a good way to do that, which for many cases is the case, which is why I like VR, great, right? Fantastic, right? But it doesn't have to be. And I think especially now, like I think you're getting a lot of that kind of like intersect between like AI and kind of the 3D and so they're kind of like different ways I think to go at certain problem spaces. But be married to the thing you're trying to solve, not necessarily the way you're solving it, I think.
All right. So to wrap up here, because I know we're at time, do you want to say anything to the audience? Just, top of brain, what are you thinking? What do you want to share? What should they contact you about?
Yeah, I mean, I would say at this point, our space is still small, right? So obviously founders that are building stuff, always happy to chat. I still believe a lot of kind of the communal aspect of this industry, there's, I think, a lot of benefits are coming from kind of collaborative approaches to things. So, I help founders out, even ones I don't end up investing in, right? But I just kind of like them and what they're doing, but for a reason doesn't lie, I still help them out. Anybody that wants to, is just joining the space that wants to allocate into the space, always interested to talk to them. Basically, anybody that's just interested in like actually kind of getting their feet wet in the space, I think I'm happy to talk to, So it's like I'm pretty fair, pretty open on that kind of thing. I think in terms of what I would say, top of my bill, does that answer your question, by the way? Or like I can like definitely.
Yeah, and one more point there, LPs, how do you pitch them? What's their hook into why they'd want to fund you?
So this is what I've found, and this is advice I've gotten from a GP that I'm sure you've all heard of, that has been, beasting it at deep tech for the last decade, and he basically told me that you're effectively distilling what he's saying is your job is to convince somebody that has already made the predetermined decision that they want to allocate, or at least the very least are like very curious into allocating into your markets, that you're the right manager to do it, right? If you're trying to justify your market to somebody, you already lost. Or if they don't care about your market, you already lost, right? And so what I've effectively gone down to is I effectively largely pre-screen LPs now, like potential LPs, where I'm like, the fund thesis for us is around AI and VR pre-seed. Like I started doing this, and I say this because one of the pitfalls I fell into early is I would talk to a lot of people that were just explicitly interested in AI. And I realized that went nowhere, right? Like literally none of those conversations went anywhere. It's always the people that came. And I always say, I think if you're into VR, you already have a predisposition to caring about AI, at least, because it's just so symbiotic, right? So usually all the LPs that I've had that effectively have come in, right, particularly inbounds or people I've got intro to, are all people that are coming in with the mentality of, yeah, I'm really interested in like AR or VR. I kind of see it as the future. I have kind of some money laying around that I want to allocate into something else. I'm kind of interested in putting money into something like this. And I would say, like, for me, the conversion of those kinds of LPs has been like very, very high, I would say. My conversion is almost near zero on ones that aren't coming in with that kind of mentality, right? So in other words, that are like, either they're just, yeah, we want to talk about ChatGPT only, or, they don't really know if they want to allocate to that kind of thing in the first place, right? Like, so that's kind of like the general thing that I'm doing now, where I'm like, I'm just really like more focused on like narrowing it down to the people that have already decided that they want to allocate into, let's call it the broader 3D space, and really just doing that. Yeah, I think frankly that's actually also like, I know a lot of people that are raising funds, like obviously outside of the VR space and all of that right now. Like I think this is probably the most valuable piece of advice I've gotten so far that I've seen working, is just focus on people that care about the market, right? And so on the VR side, I would say the problem is, and I can't judge this because everybody talks about the LP markets being ridiculously slow right now, especially for new and emerging managers. So I can't contextualize like how good or bad it would be otherwise. Let's say if we were doing this in 21. But they exist. I wouldn't say they're like a lot of them, but you'd be surprised, I think, of where some like pretty, LPs that are very willing to sign checks are coming from, that have like an explicit interest in actually allocating into VR, AR, these sorts of things. It's more than I would have thought. It's not a lot from what I've seen, but it's more than I would have expected. And people also coming from runs of life I wouldn't have expected. Like, I have LPs that are like, effectively lobbyists, they're like real estate investors, right? Like, etc. Like they're very random, but they're all kind of coming in with like, we think this is interesting. We have money. We want to allocate to this. We're trying to find the right manager to allocate. Why are you the right manager? Basically, that's the position you want to be in. So I'm hoping, of course, as Apple comes close, you're going to have more and more people kind of warming up to the idea of, hey, this is something I want to allocate into. But I think that's what you have to optimize for. It's like, I think from the GP side, you're doing yourself a favor if you're doing a little bit of like very precise criteria you're looking for an LP as well, rather than just trying to go too wide and just kind of spray everybody. Like, at least maybe that worked for generalists, I don't know, but if you're doing something like this, it's more specialist, that's just not going to work, right? So I guess it's my kind of long-winded closing thought on that.
Do you want to do one last super fast 30-second question on what like company or what problem would you definitely fund tomorrow? Like, what are you desperate to see someone solve?
Good question.
That's a great question. There are a few things. I mean, because usually I get asked this question within the paradigm of what works in VR, right? And so I would say what works in VR is not necessarily like, I will invest in it, of course, but it's not always the thing where I'm like, oh my God, this is like the coolest thing I've ever seen. Same thing on the AI side, right? In fact, I would say like now if I get a deck that says generative AI in it, I click it away, right? I'm just like, nope, like.
Oh wow, tables
right?
turned, yeah.
I think you got to be a bit contrarian, I think, to be successful in the space, right? So, if everybody's investing in generative, maybe I should look at other things. But I think they're on the VR side. I'll give you an example of stuff that I find incredibly cool. Like there's a company I invested in as an angel called Numinos, which they're actually like the founders are tour guides, actually, right? So their background is they've made a company that literally offers tours in cities like historic cities like Paris and Rome and this sort of stuff. And so they figured like, oh, effectively doing like pseudo time travel would be pretty cool. So what they started to do is actually offer VR on their tours, right? So they will give tours and they develop this like content that, like, let's say you're going to like the Colosseum or something, right? It would create this like high fidelity recreation of like some historical event at the Colosseum. They're actually in VR, right? You're like watching this thing while you're standing at the Colosseum. And like, obviously these things, again, they're still a little bit rough, but if you start like extrapolating this maybe 10 years in the future, and it's like, they're doing this in like pure AR, right? You're literally looking at the Colosseum and you're just seeing like this stuff laid over. I think it'd be like one of the coolest traveling experiences ever, right? And it's like
Marcelo from Numinos is a subscriber, so.
Oh, really? Oh, yeah, Marcelo, if you're watching this, love you, love the company. So that was one of the ones I remember when I saw it, I was immediately like, I have to invest in this. It's like, we'll figure out how to make it like market viable and how to make them make money to make sure they don't die. But like, I just want to put my money in something that's kind of like very innovative in this kind of way, right? Because it's also just very different to a lot of what you see, right? Because a lot of VR, it's like training, it's games, right? It's this sorts of stuff. To some extent, even fitness. I do like gamified fitness apps, actually. It's kind of another one I put up there that tend to get me pretty excited. But something that's a little bit like, it's a kind of a non-answer, but I would say that are like outside of the box of the traditional VR distribution things that work, right? Like games, like training, like fitness, that are market viable, but just completely kind of like, I would almost venture to say a bit crazy. Like, a lot of, maybe half the people who show this to would think this is insane. I like stuff like that. So the more crazy it is, kind of the more I can get pumped about it. On the AI side, I'm going to give you a boring answer, and I'm going to say I just like companies that are doing things to create new data sources. It's like one company I'm talking to, they're basically building like robots where one of the underlying, like self-driving robots, one of the underlying value propositions is that they want to build data sets on like real world spatial data, right? And so basically like create training sets that they license all that from that. And so me being an AI guy, obviously I know that the most powerful thing in AI is the data that trains the model, right? And so all this LLM stuff, everybody's is just building inferences on the same data. No, I want to back the guys that are building the new data, right? Like that we're going to use. And so like stuff like that to me is pretty interesting. And I think what I'm starting to look more and more at. Yeah, I'd say those two. Like, but generally, I like things that you're on the side of being a bit insane for let's say for the normie. Like, if it's nuts for the normie, I tend to get pretty excited about it. So, that was a great question. Actually, I never thought about it in those terms. Very cool. Very, very good question. I'll probably think about it even after we hop off the call. Like,
well, yeah, if you think of something, shoot it over.
Yeah, I will for sure.
And maybe someone will go and build it.
I hope so. I mean, it's like one thing that I'm hoping with this whole Apple thing is I think there will be more like canvas for creativity in terms of the actual kind of apps that you can build, just simply because of the integration factor, right? Like, if you're building for Quest, like, you really can only operate within the bounds of like the value you can generate, like isolated in that headset. But like Apple, I think, really is creating this more vertical stack, obviously, where you have a joint ecosystem between your headset, your phone, and your computer, which hasn't really existed before. And that to me is pretty interesting, I think, in terms of like how you can start designing and thinking of like products there. Because I think on one hand, it'll make like companies like VR companies more valuable because you can all of a sudden start generating value actually outside of the headset. But also lets you do cooler things, I think. I mean, like the one I always say is like a kind of a low-hanging fruit example. Like if someone was building this now, I get excited. Probably somebody is, I just haven't talked to them or the incumbents building it. But take like a gamified fitness app in VR, which is obviously one of the things that has worked really well in VR. I think that's been one of the sectors that does quite well, is exciting. Right now the problem is if you're doing the Quest, my workout, my points, whatever you want to call it, right, is like limited to my headset activity, right? Which maybe sometimes you don't want to do it all the time, right? Like maybe sometimes you want to, it's like nice outside, I want to go run outside instead of playing in my headset. You know what you can do now? You can take your Apple Watch and get basically your points outside, so to speak, but still generate value back into that same app, right? And so all of a sudden you can be like, well, I can do my gamified fitness through my watch, through my headset, through my phone, whatever. That obviously, without saying, makes like any sort of like, let's say, company that would have started as a VR fitness app way more valuable, right? Which both as a product to me is very exciting, but also as like a venture capitalist, of course, like great. Some of these companies start to generate higher ceilings, wonderful, right? Bigger exits, great, right? It's great for returns, but so I think that'll probably also like bring in more interesting builders into the space, because all of a sudden you're not as limited, right? All of a sudden you can start building software where VR is a strategy, but not a must, if that makes sense, right? And so I think you can start designing much more interesting kind of products, and you'll start attracting more interesting creative builders, I think, with that kind of ecosystem dynamic. So it'll be fun. I'm really looking forward to it, actually. I think we'll see some pretty cool stuff in the next couple of years.
I cannot wait to go to the cafe with my Vision Pro on and get
it's going to become such a status symbol. That's my thesis, right? Only because Apple built it.
So.
I remember I used to think Apple Watch, I was like, who on earth would wear this, right? Like, no way, right? It's completely useless. They've also just plastered the iOS like interface basically onto it. It doesn't make any sense. No way they're going to sell this. Look at the sales numbers, right? AirPods, I'm like, who on earth would buy this? You look like a douche, and like these things, you have to charge them, you're probably going to lose them, right? No way in hell they sell these things. And now it's almost like, I'm also still wearing the corded, earphones, but obviously there's
me too.
I only do it for calls. Otherwise I'm in the AirPods 8 hours a day.
Yeah, I mean, it's like, it's worked, right? And so, we're there are at least two things now in recent time that Apple has shipped where I thought to myself, no way. And I think what Apple just shows consistently is that whatever their secret sauce is, they clearly are very good at making people want to put devices onto their face, or their body effectively, right? And so if there's anybody that can make that form factor become like a status symbol thing, because it probably will be to some extent, because it's extremely expensive, and obviously the initial product run is going to be very limited by all indications, right? It's going to be Apple, right? So I'm curious to see that one play out. But Don, I'm probably going to be there with you, like sitting there, like doing my work in this ski goggles, right? So good times ahead, hopefully, for us.
Yep, I'll be the avatar next to you. Well, thank you for joining us, Arian. That was absolutely awesome, and
that was awesome, man.
Thank you.
No, this was fun. These are good questions, by the way. So enjoyed that.